In this video we will be analyzing Woolworths Holding Limited's financial statements, and we will determine the correct price to buy its shares. Without further ado, let us begin. Woolworths Holding Limited, WHL on JSE, is a South African multinational retail company that owns the South African retail chain Woolworths and Australian retailers David Jones and Country Road Group. Woolworths, however, has no association to Australia's Woolworths supermarket chain. The group is in the retail industry and offers the following products and services: clothing, footwear, accessories, groceries, beauty products, homeware and financial services, and it operates in Australia, Botswana, Zambia, and New Zealand among other countries. Now let's look at its financials. Let us start with revenue, which can be found on the income statement of the group under total revenue line item. Note: the blue bars show historical revenue. The green bar shows revenue for the last 12 months, also referred to as TTM, or trailing 12 months, and the yellow bars shows analyst estimates of future revenue. Keep in mind that the estimates are made by qualified professionals who analyze future performance of companies. This information was obtained from Yahoo Finance. From the bar chart we can clearly see that revenue have been increasing for the past few years, and analysis shows that it will keep growing, and as investors, we want to see revenue growing because that means earnings might grow as well. Let's look at net income of the group, which can be found on the income statement of the group under net income common stockholders line item, also referred to as profit. The group has seen negative net income in the past, in 2018 and 2019, but it bounced back to positive figures in 2020 and 2021 as seen on the chart, and it is estimated to keep growing in the next coming few years. The negative figures wasn't due to less revenue, as we saw from the revenue chart that revenue has been growing since 2018, and it wasn't to cost of sales, which has been in line with revenue. So it is safe to assume that the group's net income will keep growing. Let's look at the group's free cash flow, which can be found on the statement of cash flow under free cash flow line item. Cash flow have been rising since 2019, as it can be seen on the chart. This indicates that the group has free cash to pay for other expenditures like debt and dividends to shareholders. In addition, Woolworths Group pays dividends, and it pays them twice a year, and this is the dividends they paid since 2015. Since 2001 the group never missed dividends payment. We want to see companies have a good record in paying dividends, because we know that besides capital appreciation in the share price, other gains can be made through dividends which are paid to shareholders twice a year, and if you reinvest your dividends, your investment will grow even faster. Now let's look at the group's intrinsic value. If you haven't subscribed yet, make sure you do, as we will be sharing more videos like this on regular basis. Back to intrinsic value of the company, we have calculated the group's intrinsic value to be 66 rands. On the day of the analysis the group was trading at 57 rands. So we can safely say the shares are currently underpriced, and it is safe to buy them and guard them safely while waiting for the price to rise to 66 rands. Thank you for watching. See you in the next video. Goodbye.